Good morning and welcome to the Gamma Brief. It is Wednesday, July 15th, 6:45 a.m. Eastern, and ES futures are currently trading at 7,605. Before we get started, if you're new to the Gamma Brief, here's the background. I'm using a layered generative AI pipeline to capture market data, economic events, and structural mechanics, and then turn all of that into accurate, actionable briefings every morning. You can find out more by going to gexlog.com and checking out the methodology or the About page. This brief is built on a single data set, the SPX 0 DTE options chain. All the gamma levels, dealer positioning data, put and call walls, and the GEX flip point are calculated from that chain only. As always, this is market intelligence, not financial advice. All right, let's check out the data. Okay, yesterday's read didn't play out. We called for high volatility, but the walls at 7,500 and 7,550 held exactly as designed, compressing the session. Today, if ES holds its gap above the breached resistance, then the positive gamma regime is immediately stress test. If it fades, the expected move collapses back into dealer equilibrium. The standard regime at the cash close remains positive gamma, carrying a net GEX magnitude of positive $1.5 billion. In this environment, dealers are positioned to sell into strength and buy into weakness, acting as a structural dampening force on volatility. VIX sits at a contained 16.29, supporting this mean reversion profile. However, the regime read carries elevated uncertainty due to the prior session's data conditions, but no high-impact events are scheduled before the open. This vulnerability is driven strictly by structural positioning, as the overnight gap places the 7,600 GEX flip level just 56.4 points away from the cash close. Our neutral zone is firmly established between the 7,500 put wall and the 7,550 call wall. The expected move band, anchored to the SPX prior close of 7,544, projects a plus or minus 77 point range, placing the upper bound at 7,621 and the lower bound at 7,466. ES futures at 7,605 have already breached the call wall. Dealer gamma resistance has failed. Furthermore, ES futures have already cleared both R1 at 7,571 and R2 at 7,597. ES sits 105 above put wall, negative 55 from call wall. Gap fade reprices floor to 44. Overnight, a softer than expected June CPI print triggered a drop in near-term rate hike probabilities, pushing the 10-year yield down 4 basis points and lifting ES futures 0.18%. This disinflationary optimism is actively fighting escalating geopolitical supply shocks as the U.S. reinstated a naval blockade on Iranian ports, sending crude higher and keeping VIX contained at 1.28% overnight decline. In the equity space, communication services led the advance up 1.2%, while utilities lagged, shedding 1%. Today's primary risk arrives at 8:30 a.m. Eastern with the Producer Price Index and the core PPI data. A softer PPI print mechanically supports the overnight gap, forcing dealers to hedge upward toward the 7,621 expected move boundary. A hot print contradicts the overnight CPI narrative, incentivizing a rapid gap fade back into the dealer concentration zone. Later, Fed speakers including Williams at 8:45 a.m. and Cook at 1 p.m. Eastern could inject intraday headline friction. The environment is consistent with patient-based setups fading extreme extensions. Momentum trades here die by 1,000 paper cuts as gamma pins the range. A cash open and hold above 7,550 triggers the alternative plan for a breakout rally continuation towards the 7,600 flip. Positive gamma dampens volatility, but the overnight gap has already shattered the call wall. Watch cash confirmation at the 7,600 flip to dictate whether mean reversion or directional expansion controls the day. Yesterday's read didn't hold. Respect the levels, not the narrative. Level set, bias defined. Good luck out there. Standard disclaimer remains. Gamma Brief and GEX Log are market intelligence, not financial advice. Options are high risk, manage your size, and trade your own plan. Good luck out there.